Hey traders, Akil Stokes here. I want to start this week's video off a little differently. I had a question for you. I want you to tell me, what exactly do you see on the chart in front of you? So take a few seconds, pause the tape if you need to. I'll run the intro and the disclaimer, and then I'll come back and let you know what I think. All right, hey traders, Akil Stokes here, head currency trader with TradeEmpowered.com, and welcome to another weekend review video. I'm going to try and keep this week's video a little bit short because, well, I've got to hit the road once again. I've got a busy schedule. I've got to hit the road today. I've got an interview coming up, webinar coming up on Monday that I'll tell you guys about a little bit later. And, well, it's just a busy time of the year, so got to get through this period. But what you see in front of you is the AUDCAD 4-hour chart. And for you guys that have been with me in the live room, for you traders that follow Jason and I in our syndicate program, you know exactly what I'm about to show you. For you guys that don't, while this may look like just a bunch of junk, a bunch of consolidation, this has actually been my favorite pair to trade over the last month, and I'll show you why. We have gone 5 for 5 recently with advanced patterns on this chart, and I'll take some time to draw them in for you. And they're all Cypher patterns. We started off right here. A lot of these can be seen. I'll actually go down to an hourly, make it a little more clear for you guys. Let's start on the hourly, and let's draw out our first Cypher right here. We're looking at an X to A. I should use this tool, make it simple. Looking at, come on, Trading View. There we go. We're looking at an X to A to B, B to C, CD completion right up in this area for Cypher number 1. We barely missed an advanced pattern right here. We came back for Cypher number 2 looking like this. X to A to B, B to C, C to D right in this little consolidation for Cypher number 2. We then hit a back-to-back one looking at Cypher number 3, X to A to B, B to C, a CD completion up here. I think I remember putting a video out for you guys about how I looked at this as a double top as well. And then we put in Cypher number 4. Let me go ahead and change some of these colors just so we don't confuse you guys. Let's have Cypher number 3, purple. Let's change this one to yellow. We had Cypher number 4 on the higher time frame looking like this. X to A to B, B to C right down here, a CD completion up here. This was the double top that I brought to you guys, excuse me. And then we finally had our last Cypher complete yesterday looking like this. X to A, come on. X to A to B, B to C if the spike down here, and a CD completion right up here. So if I go back out, if I zoom back out to the 4-hour chart, you'll see that within the last month on the AUDCAD here, we had 5 consecutive Cypher pattern winners. I think gaining us, if you were to just take everything off at target 1, which is what me and Jason have been doing in the syndicate, you're looking at about 250 pips on this pair over the last month. And that proves a lot of points. One of the things that I tell to the traders I work with, the members or the clients that are coming through my 12-week transformation program is that, you know, when you first start off trading, don't try to do too much. You know, I made the same mistake myself. When I first started trading, I tried to trade everything. I wanted to be a breakout trader, pennant patterns, flags, triangles, Gartley, ciphers, bats, butterflies, 5-0, sharks, crabs, double tops, double bottoms, every single thing in the world I wanted to trade. And what happened was when I did my education, I ended up knowing a little bit about each of these strategies, but I never mastered any given one of them. So one of the things I preach now is that, hey, you know, you have so much time to learn these concepts, guys. Focus one at a time. Learn Cypher patterns. Once you have mastered Cypher patterns, once your RAS picks them up like nothing, then move on and learn the next advanced pattern, the next strategy you want to learn, while you're making money with your Cypher patterns. And the same thing goes with portfolio size. You know, a lot of newer traders, a lot of newer traders don't even have portfolios. They just, whatever they see on the trading forum or whatever pair they can find on the internet, they'll hunt and peck for opportunities. Professional traders, we have a set portfolio that we trade. And a lot of the issues I see with newer traders is just their portfolio, if they have one, again, it's too big. They want to trade 12, 13, 14, 15 pairs at the same time. And it's very hard to do consistent analysis looking at that many pairs. A lot of opportunities are going to slip through the crack. So I always say, again, we used to say it this way. We used to say, hey, one strategy, one time frame, one pair. That's the best way to get started. And you always hear, well, I can't make money doing that. Well, this is a perfect example that you can. So congratulations to those who caught all 5 of these patterns. I know a bunch of you guys did. I've gotten comments on TradingView. Of course, I've gotten lots of emails from our syndicate members and live room members. And again, it's proof that, hey, just take baby steps, master one thing at a time. And then when you're ready, while you're making profit with strategy A, then you can go through the back testing process and the process of working that next strategy to your liking. So I want to share that with you. I also want to share kind of the theme of this week, which has been really, I don't want to go too deep into it. I want to talk a little bit about entries, stops, and targets. And I'm going to do that in a little bit. First, I do want to say this. If you guys get a chance, I don't have the link yet. I'll post it probably this weekend. When I post this video over to our Trading Power website. But I'm going to be doing an interview, a webinar style interview with TradingView on Monday. Monday, May 11th at 1 p.m. New York. And I don't have the link for you guys right now. But if you go over to our Trading Power website, probably this weekend, think Saturday, I might have it up today, but probably Saturday. If you go over to our Trading Power website, scroll down through, scroll down right to this area, ideas from the blog. And what I'm going to do is I'm going to post this same video on our Trade Empowered website, and I'll put in the link where you can register and watch this event. Again, it's going to be on Monday, May 11th at 1 p.m. New York time, and it's going to be an interview with TradingView.com. So again, I wish I had the information for you now, but I don't. Now, I want to talk a little bit about entries, stops, and targets, but first, I want to show you a quick recap video of how we broke down the euro dollar this morning in the live room and kind of based that lesson off of the video I'm going to show you guys. So I'll be right back. All right, let's go over to euro dollar. I don't know how I made it this far. Euro dollar, 240 chart. Jason got short this morning in the syndicate at 113.33. 240, we've got the bigger, we talked about this in last night's video, I got the bigger bat pattern up ahead, up at the 114.14 levels. So still waiting for that. That's out of my price range. We're looking at 250 pip stops, I believe, on that. Too much for me, but I will look for shorting opportunities at this structure zone. What I would be looking for here is I'd be looking for a move right back down in the previous structure and a chance to buy euro up. Oh, yep, buy it. Looking at, we just put in a double top here. We broke and closed above it. I'm looking for resistance to turn into support, and I'd be looking to buy it up. Wait until we get more into this zone right here to look for that next buying opportunity. I think 112. I said 112.20s earlier. 112 even. I think this is going to be the best level for you guys to look to get long. You can see we hit support right there. We also hit resistance right there. We've got structure to hide stops underneath. I think this would be a great area to get stops underneath. And you can certainly set up that kill zone looking something like this. How's that sound? Sound like a plan, guys? Back up the previous structure. Thoughts? Again, I like to generate discussion. If you guys are like, hey, that looks good, or hey, what about this level? I really want this to become more of a community. So feel free to talk about it. We're like, oh, whatever you say, Akil, you're the man. We'll do whatever you say. But I think this is the best opportunity. And one of the first things that I think about always when when trading, I always think about protecting myself. I always think about where's the safest place for me to put stops. And you can call me a punk, you can call me super conservative, I don't care. The money comes in, right? I want to protect my capital. So whenever I look at a trade, I say, you know what, I could have a trading opportunity right here, but it's probably going to leave me a little exposed because again, if I look for a trading opportunity up here, aside from taking a double bottom or something like that, I really don't have support until down here, right? You guys follow me? Give me a yes if you follow me. I really don't have support till down here. So do I really want to risk this much on a trade that is, it could reverse, but I don't really know. Yeah, so I always do that. I say, you know what? Well, this is where I want to put stops at. I know I want to put stops below this structure level, right? So where can I get involved that's going to give me the best risk reward? And this is how I'm able to lose so much, guys. I make no lie about it. I am about a 50% trader. I'm a little bit above that, but I lose just as much as I win. And I have no shame. I have no shame telling you guys this. But I consistently have a good risk reward. It may not be like this, but I consistently have a good risk reward. And that's why you can see me take these losses and just shake them off. Right? All right, guys, so we're back on the euro dollar, and I couldn't show you the whole video because I spent about a half an hour breaking down euro this morning, but I want to just give you an idea of what I was looking for. Now, during the video, I got the question, hey, Akil, can't we look for an entry up at this level right here? I think it was 112.70s. And I said, you know what? I don't think that's a bad level at all. We do have structure. If we look left, structure leaves clues. We have resistance right here. We have previous resistance right here, which should act as support. I don't think it's a bad level at all. The question is, can we make it fit our risk reward? And there's three things that we want to know before ever getting into the trade. We want to know entries, stops, and targets. And what I come across, and more so lately, is a lot of traders they'll worry about entries first, meaning they'll physically enter the trade and then base stops and targets later. So they'll do something like this. They'll say, you know what, I like this level right here. 112.70 is a nice level. Boom, fire the trigger, get long. Then after they get long, they say, well, let's see. I only want to take targets up here because we have previous structure, and I'll just make my risk 1-to-1 and make it right here at this level or something like that. They'll find out their stops and their targets afterwards, or they'll do vice versa. They'll say, you know what, I want to put my stops right here, and then I'll make my targets right here because, I have to have a 2-to-1. And, although it's a good thing to have a 2-to-1 and you're not wrong one here, and you're probably ahead of a lot of traders by making sure that you put stops and targets on. There are a lot of traders out there that just go with it. Hey, I'll enter, and when it feels like it got far enough, I'll get out. So you're ahead of the curve with that. But here's the thing: we talked about this all week. Is you don't want to make your entries and stops. You don't want to make your stops and targets fit your entries. You want to do it the opposite way around. You want to have an idea of where stops need to go before ever entering the trade. So once you have an idea of where stops need to go, you'll be able to determine if this is a trade you can take at the current location, or do you need to wait a little more. So for this specific example in the euro dollar, let's say that you knew stops had to go below these structure lows right here. Stops had to go right here. You know that you're not going to feel comfortable taking targets anywhere past this level. And before you ever enter the trade, you can kind of figure out, well, if I enter right here, boom, this is not going to give me the risk reward of my liking. And what you can do is you can then say, well, maybe I got to wait till price action comes a little lower. Maybe I need to wait till here. And you can adjust that risk reward to your liking into a level that you feel comfortable with before ever entering the trade. And sometimes you're going to have situations where you can adjust it all you want. And guess what? It's just not going to make sense. And those are the situations where you say, hey, I would like to be long right here. I'd like to be on the bullish side, but I just can't make the risk reward work. And guess what you do? You don't enter the trade. You stay on the sidelines. You watch because, well, the number one goal in trading is not to go broke. And if you don't enter a trade, you can't go broke. I know a lot of you out there don't agree with that. You're thinking to yourself, oh no, the number one rule of trading has to be make as much money as you can to kill. How come, how are you going to make profit and manage money or become a professional trader if I don't take trades? And one of the things that we need to realize is we're still going to take trades, but as a professional trader, we need to separate ourselves from those 90% of traders that lose. And the 90% of traders that lose are just taking any opportunity. They're taking any trade opportunity they see. They say, oh, this is a good opportunity right here. Let's buy it. And, the difference between us and them is we're not just looking for any good opportunity. We're looking for what we consider the best opportunities. We only want to take the cream of the crop. Only the opportunities that are going to give us the best risk reward, where we have the highest of edges over the market and where we feel that the market is most likely to go in our favor. And if there's an opportunity where it's just okay, well, there's nothing wrong with just playing the sideline and letting that go. And if it goes on without you, you say, well, missed it, and wait for the next one. If it blows past your original entry, then you tap yourself on the back and say, well, I'm glad I didn't enter that. Good thing I stuck to my rules. So I wish I could have made that a better lesson, but I really don't have a lot of time to put this video together for you guys. I felt kind of bad about missing last week, so I wanted to give you guys something. Again, for you guys that have spent time with me in the live room, we've been talking about this all week, so you know exactly what I mean. For you guys on YouTube, I hope this made sense. If not, sorry. But anyway, traders, I've got to head out. You guys have a great weekend. Remember, I'm doing an interview/webinar on May 11th, Monday, May 11th, 1 p.m. New York time. I'm going to talk a little bit about the process of trading and multiple time frame analysis. I hope to see you there. And until next time, plan your trade, trade your plan. Have a great weekend.